Welcome to the Sneaky Snake Trading Strategy. We're going to talk about a few stocks right here on the Dow Jones industry. Please subscribe, ring that bell for future updates, and hit that like button if you like this. I'm live every day till the end of the year on YouTube showing my Sneaky Snake trading strategy on how to catch knives and how to play them pullbacks to resistance. So we're going to talk about a few of these here stocks in a couple different time frames. And we're going to start off with Apple, being as everybody's got their eye on Apple. It had 88 million in volume on Friday. This is a 20-year monthly time frame. I'm going to clear this chart up, show you what I'm looking at. We definitely got us an ascending triangle right here, breakout, and that support level was right at 134.22. We hit that again with a nice little long leg doji right here that could bring us back up a little bit into next week. Everybody and all the fat cats really want this thing to start turning around. It's going to be their indicator to run the rest of the market up. Is what they're saying. What I'm saying is I'll just buy it at support and sell it at resistance each day until they're done cutting the interest rates, the feds, until they're done hiking on them interest rates. So nothing is bullish to me right now. Nothing. Not a thing. Just the American people that are trying to survive in this inflationary environment. And I do believe we could see some stagflation, which we have probably already, into next year. That'll be the time to tell. Or if we put an end to this here Putin-Ukraine war, we could start seeing some rebalancing. But the feds are the big thing right now. That's all the market cares about. Support level at 134.22 on the monthly time frame, and we do have an inside long leg doji, which I think if we start to move up, we could hit that 9 for a swing trade, and that's going to be right there at 148.32. Now I'm going to pull up the daily, yearly chart. We did have a nice little breakout, and she did pull back at the end of the day right to support level. I mean, a real good support level there at 138.18 with a low of 134.22. Resistance to break come Monday, if she decides to run up, will be the 9 EMA. It's had a hard time trying to break that 9, but we did last week. Let's pull up the 20-day 1 hour. Take it to the 21 if we break the 9, and then you can run it up to the 51 and the 65 EMA. On the 20-day 1 hour time frame, I use this also as a resistance indicator with my 200 SMA. If we run up, we hit that 200 SMA, that could be a good exit idea, or break the double top, or hit the double top at 144. 144 period. There's a little gap in here too, so yeah, it might be a little bit asking too much. Maybe right here at 143.15. In that channel somewhere is hard resistance. Like to keep the solid support down here on this very low, right at 136.96. If it doesn't hold the neckline of this inverted head and shoulders. That's Apple. Intel is another one that I think is way oversold, but it's not my favorite stock either. So we're going to pull this off here. Clear drawing set. Go to the 20-year. This is the one that really will catch your eye. We pulled all the way back to the 2012 levels. 2013, where she started breaking out on 2014. So that's a 10-year low, or an 8-year low on this stock right now. I think it's way oversold, but it's not the most liked company out there right now. When you have better companies that are beating the market, AMD was one of them. Vegas and I ran that from 9 all the way up to $30, and then it broke 100. We got TSM we got MU, and we got NVIDIA, and all of them are better stocks than what Intel is. This used to be a market leading indicator for the old farts, but not anymore. So we're definitely back in this Darvas box area of support. I've got different support levels in here, and we're going to kind of find the resistance level in this Darvas box, and that's right at 26.97. We have a low support down here right around 1968 to 20 bucks, with a strong buy at 17.87. The neckline of this inverted head and shoulders, I can't see it going back that far, not really at all. I think it should start to rebound here a little bit. We did break out with a spinning top doji, and it could run up here easily to the 200 SMA on that monthly time frame. We're going to pull up the yearly. We can get a better look at it. We've got resistance levels to break, and that's going to be right around that 29, but we also have this 27, this double top up here, and that's going to be your hard resistance this coming week at 27.75. 27.70 something. And then long to the $30 if it runs in and hits that 51 EMA. That's Intel. 20-day 1 hour, same thing. We've got a low support right down here at 25.77, which hits this 50 SMA. If that holds, we closed up pretty close right there. We are at 25.91. I have 25.77, give take a few cents. The 50 SMA. Then we've got the 65 EMA and the 51 running right together. If that breaks that, you can run it up to the 200 and then maybe get a double top here this coming week at 26.75 with a resistance to break at 26.91, long 27.71. I think you can get back up there to that 27.71 if we start showing a little turnaround and break that 26.75. That's Intel. Now JP Morgan is one of my favorite ones right now. Used to be one of my least, but I love the honesty that this man's saying. We're going to go ahead and clean this up. I'm just going to give you a couple more after this, so I won't overdo you. We're definitely looking at the 20-year monthly chart time frame. We did hit some nice lows down here right around the 10. I'm using the body of the candles, 103.94, 104 bucks. I mean, that's a beautiful spot for a reversal. If not, she can pull back to these lower supports levels, and we're going to use the bottom of this engulfing candle, and that's right under $100. I don't think it can get too much lower than that. Resistance to break is going to be the top of this here Darvas box, and that resistance level is at 115.58, which runs into the 65 EMA. We'll take it to the yearly. Yearly looks just as good. It could yearly could pull back some. Could pull back some to the 9 maybe, right at the bottom of this candle. On JP Morgan at 109.57. If that doesn't hold, definitely a strong buy at 104. But I'd like to see this neckline hold right here at the 104 area. Let's go to the 20-day 1 hour. Same thing, same scenario. You can run back and hit this 200 SMA at 107. Right there at 107.37. And that would be a strong buy for me to take this trade if I wanted to day trade and scalp it. But it'd have to hold at 107.37. Each one of these time frames, you can look at the stock differently. The bigger the time frame, you can look at it as a swing. The smaller the time frame, I look at it as a day trade or scalp. And I'm only scalping these days until the Fed stop raising rates. They're screwing the world over. They're screwing us over. They're screwing retirement people over. It's not the right time to be raising rates. I would not, if I was Fed chair, I would be standing on my feet with a protest sign saying you are out of your mind, not in the middle of a war. That's it, period. So but it's give plenty of opportunity for us traders that know how to trade this market. Just always know when we broke down on the Dow, that 30,000 points, that turned me into a big, huge bear. And I'll stay a bear until we break 30,000. Now I've got a video that I've done. If you want to go back into the content of my videos, I got the Dow at 27,000. And I think we hit 28 something. I got 24,000, I got 27,000, 26. I mean, we're down for another leg down. But JP Morgan, I'm really liking this trade. We did have a double top up here, and we almost hit my long resistance at 115. And it could get a little pullback to the 200 right here at 107 and gain respect and run back up and hit a triple top break, and then we'll solid hit that 115 something. But he's spot on. He's spot on this time. Give kudos for him. Any more in here that I like Disney. Disney's pulled back down here to a triple bottom support level right at 93.08. If that holds, that'll be great. If not, it's going to be a very strong buy at 79, 80 bucks. I'm going to say $80. Resistance to break, I think we can get this back up to 111.24 for a swing trade with a hard resistance at the top of this ascending triangle at 117.82. What? Ascending triangle? Yeah, right here. Just run that line right up in there. And that's how I trade. I trade off chart patterns. That's an ascending triangle breakout. Boom! And pulled back to the bottom of that triangle, which is now a Darvis box. And pulled right back to it. And we pulled right back to it again and retested a few times. This is on the monthly time frame. Let's pull up the yearly. Again, we got a triple bottom down here on the yearly. I think we are definitely hitting a spot where this thing can reverse back up and try to break that 51 EMA. Has to break the 21 SMA first and gain respect off the 9. It's had trouble doing that. So that can be done in the last month. I really like it here. I like it a lot. I think it's a good long swing trade. If you wanted to start buying small and adding on, back to 120. Let's look at the 20-day, 1 hour. The 200 SMA will be your resistance to break with the neckline down here of support no lower than probably 92.71 to $93. And it can break and hit that 200 and double top right here at 97.96 and bring it back up on the 20-day right around 101.38. Would be a nice little exit idea. Swing trade 111.24 if the market starts to get nice, which it's not. Boeing's another good one I like. I really like Boeing. We've been in a long Darvis box for the last couple of weeks. Low support. I've got an alert set for 123.67, which is the shoulder line of this head and shoulders, inverted, my friend, with a low support for a swing trade at 127.14, a day trade. Has to respect the 200 SMA. If it pulls back and hits that on the hour time frame, I'm sure we can get back up here and try to break this resistance at 134.84. Now I like Boeing. They've got a lot of great contracts. Just problem now is in the air with the wars going on. China and Taiwan might get into it. It just North Korea shooting over Japan. It's just a total mess under the Biden administration. They're warmongers. Warmongers. None of this could have happened if I was at helm. So the next one we're going to look at, if there's any more left, I'd keep an eye on healthcare this coming week. Walmart, I like trading Walmart. Walmart pulled back some. We got to pull up the yearly, the monthly chart, clean this up. We can bounce off this 118 level, off the 65 EMA. We can hold support at the 51, and we can run it up to the resistance level of 138.18. This is on the monthly time frame. The 138.41 right there where that 21 is. I mean that, yeah, 21 SMA. We have to gain respect of the 9 to do that though. And Walmart can easily run back up here, but for right now you got to play the small channel. Definitely the 65 has to hold, and that's the EMA. On the yearly chart, we definitely had another ascending triangle right here. It has a little breakout. We've got these big crows. As long as we hold support at 128.50, we're fine. If not, I think Walmart could probably drop down here to this level right here at 125.23. It's descending pattern right now, so it definitely can have a J-hook pattern and hit that 125.23 and bounce back up to these resistance levels on my moving averages. You go back in my videos, you can watch my video on my moving averages. On the 20-day 1 hour, it's definitely a hard, good support at 128.50, and then you've got the resistance line right here. We're going to draw that in. $133 will be what you need to break. If it breaks 133, you can double top up here at 134.43. So that's it. Walmart's always on watch when the recession is kicking in. I think that'll be it for today. Welcome to the Sneaky Snake Trading Strategy. Hit that like button, subscribe, keep a good eye on these companies that I've talked about, and I'm really excited to see what's going to happen next week. We are definitely at a critical level right now, and I'll show you why. We got the Dow Jones, the big red October. I called this trade out. We definitely had a red October. It's held support though at that 28.65, $28,665 area. That needs to hold. We've got all kinds of reasons for it to hold. You have the expansion resistance channel right here. You've got the 65 right here, EMA, and you've got the triple top break right here at that same area. So if that holds, the fat cats know it, I know it, and it could bounce back up, but definitely if we hold that. If not, we're going to drop down to this 25, 26 area, and there's a little pivot point right in here, right around the 26,684. You can go back and watch my red October also video that is down in the content. And that's it, retail traders. I wish you all a great week. Please don't try to be a strong man and call a bull right now, but you can make money as it goes down, you can make it as it goes up. Have a great day.